How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you guys are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week. We break down some of the analysis we have performed to give you guys a better understanding on how we are looking at tackling these markets in the coming week. If you guys have any questions with regards to the analysis I go through today, please leave them in the comments below. And if you do go on to enjoy this video, don't forget to leave it a thumbs up. Now there's a few pairs I'm going to go over in today's video, and the first pair we're going to start with is the gold spot, the XAU to the US dollar market, to the gold to the US dollar. Now you can see here that price has recently broken structure to the downside, so we saw that this market was providing us with clear bullish structure, higher highs and higher lows. This low right here represents the last protected low within this bullish structure, as this low here created the highest highs. We've since seen price break beneath this, which is giving us signs of bearish structure. Why? Because in bearish structure, we break lows and protect highs. So with us having those characteristics, it's giving us the suggestion that price may be ready to trade us down in a bearish way. Now, in order for us to obviously look to take part in this market, moving forward, we want to find an area of supply that price can trade up and into before taking us lower. What we have seen is price come to correct itself, setting its initial lower high before it goes on to set a lower low. We just mark this out. You can see we have our impulse, correction, impulse, clear bearish structure, okay? I want to see price trade up and into this area of supply to clear any remaining orders before a continuation to the downside. Now this right here represents a distribution, and the reason why price is distributing here is because what's happening is it's offloading any remaining demand in the market and it's introducing supply. Now what we can expect from this is potentially a move to the upside to clear this area of supply before that fractal bearish structure to the downside. So when it comes to an entry, I want to see price trade up, break structure to the downside fractally, and then that's when we'd be looking to get involved in this market. Now we could use this low here as the last protected low, to give us the confirmation that the corrective wave, being this here, has finished and the new impulse is ready to take place. So once we have a break in these lows after the penetration of this zone, that's when I'll be looking to get involved in short positions in this market. Now, as we know, the gold market is very much a bullish one, and it's constantly creating new highs in the market and reaching new prices. But I do feel price has to come and clear some of this liquidity to the downside. So I've gone ahead and marked out this area here as an area of interest. This is somewhere we can look to take profit in any short positions we do take part in. So just as an example of a trade that we may place, let's say that we get involved around this point. We have our stop loss just above the area that we get involved in, and our take profit would be set just above the demand zone we're expecting price to trade down and into. As you can see, the results of this would give us a brilliant risk-reward return of a 1 to 13, meaning for every 1% that we risk, we're looking at gaining back 13% in returns. So that right there is my analysis for the gold market. I am wanting to see some bearish structure being introduced into this coming week. Heading over to the Great British Pound to the US dollar, very similar situation to the gold to the US dollar. We've seen price trade up and into this area of supply. I'm now wanting to see a break in structure to the downside to suggest that enough supply has been introduced to flip the S&D balance. We'll obviously get confirmation of this flip and reversal once we see a break in these lows. Again, why? Because these lows here are seen as the last protected lows within this bullish structure, as these lows created the highest highs. So once we have a break in this low, we can then expect price to correct itself initially before a continuation in bearish structure. So again, if we just mark this out, you'll see like we have an impulse, correction, impulse, price then reverses, breaking structure to the downside. So this would be our break of structure. Price then comes back up to set a lower high before continuing this bearish momentum to the downside. So with this market and the gold spot both going bearish, well, my thoughts for them to go bearish, that would tell us that we want to see strength in the US dollar. Why? Because the US dollar is quote currency for for both pairs. So with this one, I want to see a break in these lows here set on the 1 hour time frame. Once we have that, we can then look to get introduced in some short opportunities. So we have 2 brilliant trades that we could look to place this coming week, should price present us with the confirmation we need to get involved. So that's my analysis there for the Great British Pound to the US dollar. Heading over to the Euro, US dollar, again, the exact same setup. We want to see a break in these lows here, break in structure to the downside, giving us the confluence to suggest prices going short. Again, representing strength in the US dollar, with the US dollar being quote. We want to see weakness in these markets, and these markets are obviously base for Euro, Great British Pound, and the gold spot. Very quick, very brief analysis here on these 3 pairs. It's all that's needed, to be completely honest with you. Just wait for market structure to take place and give us the confirmation we need. There's no need to complicate our analysis. We are simply waiting for price to trade into areas of interest, display confirmation of a reversal, and then we look to get involved in these markets. Now, in terms of a take profit target, I'll probably be setting my take profit just above the higher time frame low here, just to guarantee that our take profit is actually achievable. But again, that is my analysis there for the Euro US dollar market. Just to finish off with the US dollar Swiss franc, you can see that we want to see the opposite take place. With the US dollar being the base currency, we're wanting to see price trade higher, right? And this is because we want to see that strength in the US dollar. We want to see weakness in the Swiss franc. So I'm thinking that this week we're going to have some fundamental news surrounding the US dollar that should encourage price to strengthen and appreciate. So with this one, it's a bit more tricky because the last protected high within this bearishness is actually this one here. So we want to see this break in order for me to have full confluence that this price is ready to in fact reverse and start trading us to the upside. So we can set our alerts at this point, wait for price to break structure to the upside, wait for that pullback to give us that refined entry, and then we can look to get involved. Now, the reason why I always wait for a pullback is, as I say, it gives us the opportunity to get involved in this market with a refined entry. If we were looking to take part here, some of the returns that we could be looking at would be amazing. I'd set my take profit just below the last higher time frame high, just to guarantee that it's achievable. But if we were to get involved, say here, once we have the break, we'd actually have to set our stop loss below this low, as this would be seen as the last protected low within what would be bullish structure. You can see we would walk away with a 1-to-1 risk reward ratio, whereas this position gives us the opportunity to walk away with nearly 14%, risking just 1% of our equity. So this week we do have some amazing trading opportunities. It's just a case of sitting on our hands, waiting patiently for price to play into them. And then as soon as we're delivered with the confluence we need, that's when we can look to obviously take part. Being a trader rather than a gambler is waiting for opportunities to play out and waiting for the right moment to take part. A gambler is someone who will just place positions willy-nilly without waiting for the right confluence and confirmation. So if you are the type of person to be preemptive and just place trades for the sake of it, this is probably one of the reasons as to why you may not be successful in this industry. Some weeks I don't place any positions at all, should price not play into my hands, but some weeks I place multiple trades given the right confluence and confirmation has been provided. Now, as I say, these 4 markets that I've gone over today are offering us with some brilliant opportunities. It's just a case of waiting for that moment to take the trade. But that right there, guys, is actually going to summarize this Sunday sessions video. I hope you've enjoyed. I hope you've learned a thing or two. I've been very brief with regards to my analysis, but I don't think it needed to be in depth really. I've given you key points. I've given you the direction I want to see these markets trade in. It's now just a case of waiting. Now, as I said earlier, if you guys have enjoyed this video, don't forget to leave it a thumbs up. And if you have any questions or queries with regards to the analysis I've gone through today, then just leave them in the comments below and I'll get back to you as soon as possible. Now, with all that being said, guys, thank you very much for watching and I'll catch you all in the next Sunday sessions video.